Alright, hello and welcome to Camel Finance. I'm your boy Camel, and I want to start by pointing out that PayPal has apparently got this new acceptable use policy which begins on the 3rd of November and will enable the company to withdraw $2,500 from your account if they find anything you've said to be objectionable, including misinformation or discrimination of groups or individuals based on gender identity. So take that as you will. If you think PayPal is bad, just wait until you see what they can do with CBDCs. If you've seen this channel before, then you will know exactly what they can do with CBDCs. And if not, then I encourage you to go and watch some of the CBDC videos that I have put out. In the interest of full disclosure, PayPal says they're not fining users for misinformation, and this language was never intended to be inserted into our policy. So make of that what you will. My message is take your Bitcoin off PayPal. Do this immediately. PayPal, as far as I'm aware, won't even let you withdraw your spot Bitcoin, which means you never actually get to own it. So make sure that if you have Bitcoin on PayPal, just sell it for fiat, take the fiat out and go and buy it from a proper exchange that will let you withdraw it. And then once you've withdrawn it, go to any one of the videos that I put out. You can use one of these links highlighted here to take you straight to the official websites for Trezor and Ledger and buy yourself a cold wallet, and then you can take true ownership of your crypto. UK companies are collapsing at the fastest rate since the global financial crisis in 2008. So there is still an enormous wall of worry for the markets to climb. Last week, we are coming off the back of unemployment falling to 3.5%, which is the lowest since July 2022. And of course, the markets did not respond positively to this. We are in this strange environment where good news is actually bad news and bad news is good news. The reason for this is unemployment falling to 3.5%. Suggests that the economy can actually likely withstand a lot more tightening from the Fed, and that the Fed is not going to have to back off anytime soon and can possibly continue hiking rates. So we'll see how that goes. I think they're close to a pivot. That remains to be seen. One thing I do know for sure is CPI next week will decide the fate of this market. A shockingly low CPI print will likely get us a bid underneath the equity markets, and conversely, if we get a very high CPI print, I would expect new lows imminently. So we've got to keep an eye on Thursday, the 13th of October, because that is when the US CPI data is scheduled to be released. I likely won't be trading around this, but I'll get into the charts in a bit. There are some very interesting developments that I want to share with you. And before Thursday, there is Wednesday, and on Wednesday, the Fed minutes are coming at 2 p.m. Eastern Time. A lot of Fed speak, a lot of market moving data to be forced upon us this week. So make sure you are trading safe out there. Let's keep going, because the last 2 weeks have been a game changer for the S&P 500. In hindsight, Japan's intervention was the tipping point. The UK and China were added to the mix, and now the dollar and yields reversing with a final nail in the coffin. A Fed pause pivot is what follows. According to Gamer Trades and according to me, I really do think we're close. Obviously, if you've been watching the channel, you'll know I've been harping on about this forever. Quantitative tightening is kicking in as expected. We are seeing the Fed balance sheet runoff beginning. And a lot of people will see this and interpret this as, but the Fed, bro, there's no way anything can catch a bid. I'm even starting to see this in some of the comments on my YouTube videos to say there's no way with this sort of thing going on, Bitcoin can catch a bid. But if you look at the last time this happened, Bitcoin found its lows for the prior bear market. And it shot up a massive 4x, 400% in just 6 months. Okay? So don't think that this backdrop isn't conducive to a rally in Bitcoin, because it actually has been historically. We're only a year and a half away from the Bitcoin halving. I think this halving is going to get front run for the first time ever. This has always been a topic of the debate for the last few halvings. I remember in each prior halving, people looking at Bitcoin and saying, well, is it priced in? It must be priced in because everybody knows. And then sure enough, we get to the halving, we get a little pullback, and then it shoots up, showing us that this was actually not priced in. I think this is going to be the first time this halving is actually front run, but that remains to be seen. And of course, is speculation at this moment in time. Currently, the Dow Jones is more volatile than Bitcoin. Whenever Bitcoin historically goes through one of these volatility compressions, it precedes an enormous move. I think consensus is that enormous move will be to the downside. I think the lows hold. That remains to be seen. But one thing that we can be sure of is that Bitcoin is setting up for a massive, massive move. Adoption continues, and 30% of Canadians are planning to buy Bitcoin and crypto within the next year. And we're also seeing Bitcoin mining keeping this 40-room hotel warm, so they can use the energy from the mining rigs to heat a 40-room hotel, whilst of course generating Bitcoin and contributing to the decentralization of the network. So this is the sort of thing I love to see, and I'm sure we will continue to see more and more of this. Visa is launching a Bitcoin and crypto-backed debit card, and it's doing so in 40 different countries with FTX. If this isn't adoption, then I really do not know what is. Markets, of course, go through cycles. We're now at that stage of discouragement. Most people only see a bear market rally given the macro backdrop, yet markets rarely do what everyone expects them to do. Game of Traders is making the argument that we're in discouragement here. Okay, and then we've got this wall of worry to climb before anxiety, aversion, denial, and then a return to confidence. I think it's quite possible we're in the middle of climbing this wall of worry. I think we could be much closer to this side of discouragement than this side. I think that possibly we're going to drop into this cycle low at the second week of November and then start to climb this wall of worry. Then I think it makes sense that we would have a pullback, a final shakeout before we go. That's something Bitcoin always does. So it's quite possible that we are this side of discouragement from my view. Either way, we do know we are getting to the end of this bear market. And taking a look at the NASDAQ, the median price to sales is all the way down at historic levels. Buy when others are fearful. Okay, NASDAQ median price to sales ratio is back at historic levels of 4.5, only seen a few times in history, and every time it's been seen before has led to massive upside in the equity markets. So just before we jump into the trades, I wanted to point this out just because I noticed it. I made a video here, how to find and trade momentum stocks, about a month ago, and on that I had a list of momentum stocks, and I was just noticing earlier on that plenty of these have broken out, and this one here I think is up something like 20% here. This one from the box, if I zoom out so you can see a bit better what's going on, this one was a 20% move again. This one here was a 25% move, and NOC looks like it's thinking about breaking out. It's had a little fake out retest, so I don't know, 620, is that the target? Another 25%. Anyway, if you want to see a slightly abstract concept of buying at new highs in order to find momentum in stocks and how to do that, then go and watch that video. In the meantime, let's get into some charts. I want to start with the dollar. Actually, no, I want to start with gold. Let's start with gold. So gold, here's gold. I've been lining up this long because I said that if we broke out of this downward sloping trend line, then we'd have to respect that as a breakout. But I also said the entire time that cycle count wise is telling us to be open to downside. This looks to me like it's time to go short. Okay, so there's still some mixed messages, and we'll go to the dollar in just a second. But for now, we know that first of all, the cycle count is telling us to expect downside. We had a broken cycle here, so now we know that following on from this broken cycle, we've then bounced out of an early cycle low. This looks to be stopped at resistance, rejected from resistance, and now making its way down into that daily cycle low in November, and possibly even the weekly cycle low, one more cycle after that. So we know that the bias is down. We've also lost this massive support level. Granted, we've recovered it, but it now looks like it might be that horrible scenario where you get this bear trap, a bull trap, and then roll over. I have mentioned that multiple times on this channel as well. That certainly seems to be what's at play. So the question for me is, on Monday, is it time to get short? And I think the answer is yes, because look at this for a risk reward trade, okay? This is massive. This is absolutely massive risk reward. You've got clear invalidation at the high. And I think that if we were to open on Monday above this blue trend line and start to push on, then I think we'd have to entertain longs and respect that this trend line is being broken out of. But if we continue with weakness on Monday, then a stop above this high from 2 or 3 sessions ago, something like this is going to be the play from me. I think the cycle counts, they don't make sense for us to be long at the moment, and this appears to be a rejection at resistance. So selling rallies in a downtrend, selling resistance in a downtrend makes absolute sense to me. And therefore, I think Monday is time to keep an eye on this market and start to line up some shorts. So I'm looking forward to shorting this. The cycle count is down, as I've said multiple times. The only thing that could, in my opinion, throw this off is the dollar. And so we'll go to the dollar now, because what if the dollar has topped? What if that's actually the top of the dollar? So we've had our first warning sign because we've broken down from this blue trend line. Now we're coming in for that retest. But if we can get rejected off of this Monday and Tuesday, perhaps, and then come down, I think that this red line here would be tested next. And what if we were to do something like this, right? This would be incredibly bullish for precious metals, for risk assets, for Bitcoin. And also, if you look at this sort of structure here, look at this date. It's right around the 11th of November, which is where we would expect stocks to have just found a bottom. It's where we're expecting the Bitcoin cycle low to come in. It's where that cycle low for gold that I showed you is due towards the end of the year, down here. So that would sort of make sense from a dollar top perspective. I know a lot of people wouldn't be expecting it, but that kind of makes me more bullish. We're also seeing, as I've shown in prior videos, smart money walk away from this market. We're seeing that institutional shorts are starting to cover. So quite possibly this yellow squiggle scenario is in play. So we need to keep an eye on that, because if this is actually what unfolds, then gold will end up breaking out of that downward sloping blue trend line. But for now, we need to continue to just not try to predict or guess what's going to happen and let the market tell us. And the market is telling us for gold that it has rejected off of this downward sloping trend line, and therefore the short is in play. And it's also telling us to expect a cycle low to come much later in the year. So my strategy for this is going to be to short this market with a stop above here, and then to flip long if that's stopped out immediately. Because if we move down here and then crack up here, then we're gonna go, aren't we? So that will be that. Caveat to this would of course be that if we open up above this trend line, then I think it's time to go long immediately. So that's the strategy for gold. I'm going to be setting that up on Monday. Silver looks like it's had some sort of breakout, retest of this high here. So is that going to go? Potentially one way you could play this is to short gold and long silver, and then you'll lose 1R on the stop. But if one of them's going to go and the other one isn't, obviously, then you would likely make more on the winning position than you would on the one that got a 1R stop. So that's an idea anyway. Oil is kind of doing what we thought it would do. So I've outlined this scenario here. I think we can get a short. In fact, I'm going to line the short up from here. So it's going to look something like this. As and when it comes, if we can continue to follow this pattern, I think that we can only go as high 90s or 100 before we roll over. So I'll keep my eye on that and continue to update. This would have been a nice entry, but I was away on a birthday party, I think, so that's fine. Sometimes you've got to let them go. What else we got? Bitcoin still trending into this 60-day cycle low. Going through all the scenarios in my head, I really want to see a long out of here, and the same is true of Ethereum, as I keep saying over and over again, but we are indeed getting close. We're only about a month out from now. I've also added Coinbase. I'm going to add a position to Coinbase for longer term accounts. Same is true of MicroStrategy. And I've decided to add Riot blockchain as well. I haven't shown this on the channel, so this is new. I'm going to add Riot blockchain to my longer term accounts out of this 60-day cycle low for Bitcoin, and Marathon digital holdings as well. So all of these are going to be purchased inside a longer account. I'm waiting for a trendline break on Tesla, but this is going to be a long from me as well. I expect this might take a little while to set up, but I also think the lows are quite possibly in. So I know it's not a popular opinion. Same is true of Apple. Not a popular opinion that the lows are in for Apple, but we'll see how it goes. I think trendline break of that, and that's a nice clean long. VIX is coming in for an underside retest, likely going to be a short from me on Monday. We'll see how this opens up, but this has been lined up for a while. I think we've got a fake out, breakdown, retest of the underside of this trend line, and I think that this can resolve to the downside. So we'll see how it goes. It's probably going to be a bit of a volatile week because of the CPI and stuff. But looking at the UKX again, trying to come back down and get a retest. I don't want to jump in here. I'd like to see a bit more of a pullback. So just playing patient with this. Want to make sure I get a really good entry. Wouldn't be unusual to see this sort of like big basing come out of here, and then it can go. So in which case, if this happens, then that would be ideal, because we can just put a trend line like this and then trade the long or the trend line break like that. So that's getting a bit ahead of ourselves. I have to wait and see what the market can do, but a little bit more patience from me. And the FTSE 100. The S&P still kind of holding the lows, isn't it? It hasn't broken down. We know that cycle is coming into focus at the end of the month. It sort of aligns with what I said about the dollar. Is it going to hold the low? Quite possibly. If we get a low CPI print, I wouldn't be surprised to see us continue to sort of range in here. But of course, being open to some more downside. I've kind of been wrong about the lows holding so far already. We did violate them, although we've recovered them, and now we're sort of right on the edge. So we'll see how that goes. A little bit more patience, and I'm sure that will be rewarded coming into the end of this month. And XRP, look at it go. This looks undeniably bullish to me. We have apparently come down, had this retest, and now we're working our way back up to the top of the range. So if it's going to maintain bullish structure, it really kind of needs to get out of this range and take out this high at 55 cents. It needs to do that sometime in the near future, in my opinion. This is certainly more bullish looking than Bitcoin and Ethereum at the moment. So long and strong, continue to push. I think quite possibly we're going to get a nice move up to $1 plus in the not too distant future. So hopefully we can get that. Lastly, the chart of truth, the 10-year yield. This tells us that because it has recovered this line, we're likely pricing in further rate hikes to come. So we'll see about that. For now, Is this a short-term top? Are we going to break down? I would say that since we've recovered this line, it's likely that we are going to move higher. I guess we could redraw this trend line here and go again. Who knows how high this thing is going to go. Likely towards 4.5% for the end of the year, in line with what the Fed has been saying. But of course the Fed always lies, so we'll have to keep an eye on this. But this is not a good look if you are in the camp of people that expect a pivot at the moment. That could of course change following on from the CPI print later this week. If you found value here today, I'd appreciate it if you could drop a like on the video. Subscribe if you're not already. Be careful out there this week. There's going to be a lot of stop hunting, market maker games, CPI, CPI, all of that sort of thing. So don't give the MMs your stops. Don't take unnecessary risk. Let the dust settle. Be patient. Be selective. And things should work out just fine. Until next time, all the best from me. Take care. Cheers. Bye.